Joyce, how significant is the transition? How are you thinking about it at the moment?
Well, I think we're seeing synchronized growth, as you point out, and we're also seeing a very supportive financial environment. So I think this is the moment to actually move away from such a highly accommodative environment.
So then what do you make of when I brought it before, where you wind up seeing growth, and that's sort of what the rate hike, the balance sheet normalization is going to be reacting to versus a rate hike, which is more inflation. Do you feel like that's the case? We're looking at two different types of speeds?
We're looking at two different types of speeds because the balance sheet expansion by G4 central banks was $4 trillion in 2016 and this year. So we're looking at that to come off because it's been so accommodative. But on the inflation side, I think the important thing is that the growth indicators are showing improvements notably in Europe and also in emerging markets. So it is global synchronization that we're seeing as U.S. growth is still solid. So I think the balance sheet reduction, this is the right time to do it without the external conditions being as constraining as they could be.
Yeah, and David, it really seems like economists are betting on that December rate hike as well as September at that balance sheet normalization.
Exactly, and when we talk about balance sheet normalization, Joyce, we tend to talk about when does it start and how fast does it go. We tend not to talk about where does it end up. Most economists, I think it's going to be larger than it was before they started out. I think it was about $800 billion. But what is the difference to the marketplace if it's $2.5 to $3 trillion as opposed to $1 to $1.5?
Well, we're looking at an estimate over the next 2 years that's about $2.5 trillion ourselves at JPMorgan. But I think that this also is something that that could be modified as we see how economic conditions play out. But I have to point out, it's still balance sheet growth. It's just the lowest growth in the balance sheet in a decade. So it is a reduction in balance sheet, but it's still growth in the balance sheet nevertheless.
If the ultimate destination, Joyce, is $2 trillion, how long does it take to get there?
Well, I think the timeline that has been outlined has been, all the way out until 2022, and so we're looking at the Fed starting, at the start of the year, and that sometime next year that the ECB would, start the process as well. But I think the market has already incorporated this, and just like the Fed hike was not a surprise, this won't be a surprise.